The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m., 24 minutes to go until the start of trading, and we got higher prices coming at you, folks. We got the S&Ps right now up by about 8 points, trading at 42.33. Almost made it yesterday to all-time highs on the futures, within about 2 points before we traded lower. We'll zoom in on the action yesterday. We got action in both directions. We make lows shortly, just before noon. In the S&Ps, you're looking at a low of 42.05, and just like that, we're solid almost 30 points above that level. You see the acceleration. It was short-lived. We trade down to 42.05 yesterday, and by noon Eastern time, you were back up there at 42.27. And since then, I mean, that's almost a 5-point trading range, folks, since noon yesterday, right, up until this morning. We just climbed above 42.30, but you're talking about a tight trading range in the S&Ps. That's correlating to a VIX 1703 this morning. Low volatility priced into the S&P. You check out the NASDAQ 100. Pretty similar action. You trade lower out of the gate yesterday. Not quite a full rebound like we got in the S&Ps. Nonetheless, you skip across at about 13,820. We're a bit higher this morning, up about 0.4% in the tech stocks at 13,866. You get the Dow. Dow gives it up yesterday. Volatility across the board, we get it back, and just like that, we're trading almost flat within 3 points of where we were yesterday, 34,589 in the Russell, continuing to climb higher. Check out the Russell. I think we're about 16 points from all-time highs. There you go. We make a high at 2350 today. All-time high is 2366 in the Russell 2000. Bitcoin catching a little bit of a bid and a rebound. Bitcoin up about $2,000 on the session, but things were looking a little dire yesterday. 30,915 was the low at 11 a.m. yesterday. A lot going on in that Bitcoin market. We'll talk about that a little bit later in the program. How about crude? $70, the new norm for light sweet crude. It continues. We're going to be talking to our man Teddy Kegstad later in the program. He's going to be talking Forex. He's been talking about oil. He's been talking about $100 oil for a while now. That'll be a good interview as always, coming up later in the hour. Gold contract up about $2 at $18.96 this morning. Silver's up 20 cents, $27.94, and we got to jump to notes and bonds. Look at this move we're getting, folks. How about not only a 1.4 handle, 1.48%. Excuse me, the yield on the 10-year, you're looking at 1.487 to be exact. The yield on the 10-year, quite a far cry from where we were last Friday. You look at the price. You trade from 131.18 last Friday. We're trading at 132.24, a full 0.6 ticks. You put this thing on a daily, you see a little bit move away from where we've been ticking across. You put it on a weekly. Whoops, excuse me, that's a 15-minute. Put it on a weekly. I've talked about it in my newsletter a lot. This could be an area. It correlates to the area that you go back to September 2019. That area was an area of resistance. It's now turned into an area of support. Also correlates to quite a move. You go from October 2018, 117.35. How about trading up 23 points over the period of about 15 months? Is that 15 months? No. October, of 2018. Yes, about 15 months, a year and some change, up to 140.24. You consolidate before you kind of fall out of bed. But just like that, the 382, right where we were prior, 132.24. Now, again, you put that back on a daily, though. You zoom in on the action we've had, and you see we're kind of climbing up to the upper boundary line of maybe you could call it a consolidation. Since about March 4th, you've been chopping around between about 132.25, you could call it almost 133, the upper boundary line. The lower boundary line, somewhere around maybe 130, 110. Nonetheless, we're getting higher prices and lower yields, as it looks like the Fed will be in there for the meantime, providing stimulus. But, man, we're going to talk about that as well, because we got some inflationary data coming out tomorrow. We'll see how that hits the market as well. All right, let's jump around to what else we got going on. We're going to start it off with inflationary data, because that's going to be something we're going to talk about tomorrow. So we got wage data in the non-farm payroll numbers last month. We get them every month, right? But talking about the wage data and how this may persist, in terms of where we go. So we get data. What are we getting? We're getting consumer prices, CPI. We get that data tomorrow morning. Market will be looking for that. All right. It's expected to show prices rising another 0.4% in May, pushing the annual inflation above April's 4.2%, already the highest in more than a decade. Now, you tie this into wages, okay? This is the wage data that came from the non-farm payrolls number. In the black, you have the average hourly earnings month over month, okay? We'll just zoom it in on the May numbers we got. You have 0.5%. The pink line here is the estimate. We've been blowing away the estimates, folks. Wage data, average hourly earnings rising faster than the estimates have been there, right? Whether you look at 0.5% month over month in May, whether you look at April, had 0.7% when they were looking for 0%. Last month, you're only looking for 0.2%. And it doesn't take a genius, folks, to figure out that if you get rising wages at a time when you get rising costs, the two of them may work together. They call it the dreaded spiral here. The idea is that higher wages spur more spending growth that strains production capacity, drives up business costs. In turn, companies raise prices, workers demand even larger pay increases to stay ahead of rising costs, and on we go, right? Self-fulfilling as then the two work together for inflation. And that's the worry there. We get CPI data out tomorrow. Regardless of how the jobs are doing, okay, you have to consider that, man, oh man, in a big way, that this market could see that CPI data. So CPI, you have coming out tomorrow, okay, 8:30 in the morning. We get CPI data out tomorrow morning, and then you tie that into how that comes into wage data. But, man, you look at this bond market, folks, and it's telling you that we got the Fed in there for the long haul right now. You look at that acceleration. Last Friday, before the jobs number, you're sitting with the 10-year at 131.18. We're sitting at 132.25 right now, a full point and 7 ticks in basically, 2 to 3 trading days. You could call it, I guess, Friday, Monday, Tuesday. We're sitting here overnight, 3.5 days. Nonetheless, you have higher price, lower yield. We're under 1.5%. We get CPI data tomorrow. But this market is pretty convinced that no matter what happens tomorrow, I think, in my opinion, you're going to hear the talk that it's still transitory. We're not going to have enough information yet for the Fed to be too worried about maybe non-transitory inflation. But, man, you better be putting this on your radar, folks, because you see this type of wage appreciation, all right, and you see the CPI data as well. Even if we're persisting on jobs, kind of missing the mark in terms of what we want to add. I mean, we're still about 8 million jobs under employment. But if we start seeing that type of inflation and it persists on a wage level that then carries through to consumer prices, that's where you might see the Fed be a little bit worried about the persisting on a consistent basis as opposed to a transitory basis. Interesting nonetheless, CPI data out tomorrow morning. Ahead of that, we got S&Ps up about 6 points right now, 42.32. We're about 6 points away from the all-time highs on the print on the futures of 42.38. NASDAQ 100 strong as well, up 54 points. We were as high as 13,917 last night. We got the Dow barely negative off 3 points, and you get the Russell up there near all-time highs as well. We make it to 2350 this morning. All-time highs, I believe, 2366 in the Russell. And we'll jump over to the VIX. Volatility index this morning, pairing some of those gains, we're at 1653 as this market just continues higher. All right, folks, stay tuned. We're going to come back after the break. We're going to be talking to our man, Kevin Hinks, every trading day at 11 o'clock. Fast market, folks. We'll be talking about market. We'll be talking options. Stay tuned, folks. We'll be right back in 3 minutes.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got markets in positive territory. Dow barely in the red by about 2 points right now. We got the VIX trading at about 17, and we got a yield under 1.5%. We got CPI data out tomorrow. Let's jump over to our man, Kevin Hinks. Every trading day, folks, live on Tiger TV. Outstanding program, fast market. Kevin Hinks, Alex Coffey, and the team at TD Ameritrade Network breaking down the markets, talking about hypothetical trades. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. Today's going to be an interesting day because on Fast Market today, after or before, I guess, we'll do, like Folio will do a presentation comparing Coke and Pepsi today and the differences and similarities between those two companies. But then in the first segment of the show, we're going to go there, Tommy. We're going to look at GameStop, and we're going to trade it ahead of their earnings today after the bell.
Boy, talk about a lot of variables going into their earnings, Kevin. Not exactly sure that the fundamentals driving anything going on in that equity, but interesting to see what they'll be talking about, of course. With everything going on, the meme stocks, they're rocking again, not necessarily GameStop this morning, but you got Clover Health up there making some headlines, of course. AMC was the one really rocking last week. So Coke versus Pepsi, I love the comparison you guys have been doing all week. Some of these competitors, you had Walmart and Target. Target, I think they upped their dividend again today. Seeing those companies kind of competing. And then tomorrow, of course, Kevin, all the talk, we get CPI data. I was talking about a little bit as I kicked off my program, talking about CPI data tomorrow at a time when, off the heels of that jobs report on Friday, man, we got yields tanking, really. I mean, we're up a full point in 4 to 6 ticks, Kevin, just since Friday morning, as the market seems pretty comfortable here with rates staying low for the time being, almost regardless of what's happening tomorrow, for a pretty good economic data point out for the inflationary discussion, at least tomorrow morning.
Yeah, Tommy, if you look at the consensus for tomorrow morning's number, after last month, the headline number was 0.8. The core was 0.9. This month, they're only looking for up 0.4, which normally would be a pretty healthy number and a number that you could latch onto. However, right now, with all the hype about inflation and transitory nature of inflation, I think that number is going to come under a lot of scrutiny to think, is the overall inflation starting to taper off and come down, or at least plateau at these levels? And I think the bond market is giving you a pretty indication what they feel about inflation going forward.
I would agree. There's no fear at all in that market right now as you have the prices continuing to climb, folks. Right, even on this session, we're up 11 ticks right now, 132.25. And as I talked about, I mean, you're talking about a yield right now, 1.486% on the 10-year. Remarkable, Kevin, and I agree. But, you know, what I try and wrap my own head around, right, is how that balance is going to persist. We're not there just yet, as in it's very easy to say that it might be transitory, and you make that argument, right, because we're in kind of that transitory stage of still trying to open things back up, and obviously the pressures on prices as kind of some of the, you know, core elements of things going in terms of goods being produced, the battle, the production, the supply lines being strained, et cetera, as we open back up from COVID. But it is interesting when that conversation really becomes a difficult one to spin transitory if these numbers persist, Kevin. CPI data out tomorrow, but listen, as you talk about, we all talk about the note and bond market, man. You can't deny the type of money that is in that market. And folks, it is a one-way trip right now from that jobs number we got on Friday in a big way. So Kevin, talking about, because you guys are talking about Coke versus Pepsi, you're doing the comparisons. When you look at like trades like that, do you ever consider, you know, whether you're maybe, and you don't have to buy one and sell the other, right? But do you ever, in your own head, because, you know, Walmart and Target I just love, because I've done it in my own head, Kevin. I trade both of those stocks, Walmart and Target. I agreed with a lot of what you guys said. And I found myself, even before COVID, you could say, you know, listen, they're both great companies, but I think Target has a better opportunity here. Maybe I'm going to, you know, buy some volatility premium in Target. Maybe I'm going to sell some in Walmart, and I'm looking, comparing those two. How do you ever wrap your brain around some of those big competitors like you're going to do in Coke versus Pepsi maybe today coming up on the program?
Well, we certainly look at competition like Home Depot and Lowe's and Coke and Pepsi, although I don't actually love the comparison between Coke and Pepsi, because Pepsi, if you look at the most profitable part of PepsiCo, it's Frito-Lay. It's food. It has very little to do with actually soda or drinks in general. Now, it's part of it, but the biggest part of PepsiCo is Frito-Lay. So I love to look at comparisons. Like, I can go through a list of them that we look at generally, like AMD and Intel, right? We look at that one a lot. Home Depot
Sure.
and Lowe's that I already mentioned. We look at that one a lot. Yesterday's comparison, Nike and Lululemon. So I love to look at comparison and see, is one gaining on the other? Are they a true comparison to each other? So, yeah, these are just fun things to do, and they're fun exercises to do. And, you know, could you do a pairs trade? Sure, of course you could. You could buy one and short the other. But like yesterday's conversation, Tommy, it really didn't say, you know, buy one and sell the other. It was, we really like Target in yesterday in the discussion, and Walmart's trade was more range bound, where it was going to stay in a range, not necessarily go up or down. So that's the way we look at them, each individually, but it may work out where you're long one and short the other. But normally we put on things, we don't compare them to the other, because for a retail trader, that's very difficult to do, and it could gobble up a lot of their capital. So
Sure.
Even if we do something like that, we do it using options, Tommy.
Because I find it so interesting in my own head. I was doing the Target versus Walmart a while back, even prior to COVID. And you wrap around some of these brands. Now, of course, you know, all of those companies we've talked about, super strong companies, in my opinion, in terms of, you know, Home Depot and Lowe's, Target and Walmart, even Coke and Pepsi. But the smaller companies, as we adapt a world where you don't need as much of a physical presence. And I remember having these conversations with my dad, saying specifically Target versus Walmart, right? That you don't need to have the presence that Walmart built its reputation on, basically, you know, being able to touch every single consumer almost in the country. If you just need to deliver that product to somebody's door. And it's interesting, the run that these companies have had. Again, both strong companies, handled very well during COVID. But it's very comparable when you get Target kind of overachieving versus Walmart, right? And almost similarly, when you pull up Lowe's, I mean, you were at $60 of the lows of Lowe's. During COVID, you're at $191. Even prior to COVID, you're at $120, you're at $191 versus Home Depot. Prior to COVID, you're at $250, you're sitting at $310 right now, right? As in bigger companies, tougher to grow on the same scale, but it is interesting to see some of these brands, Lowe's versus Home Depot, kind of accelerating, much similar to Target versus the likes of Walmart. I just try and wrap my head around that, Kevin, as in you don't need that physical presence anymore that you might have needed even 5 years ago, even 3 years ago. They have the supply chains, they can deliver it, and you take with that the brand, which I love that you guys break down, just kind of that brand, the like folio, and how that sentiment plays into things, because it matters, man, in a world where everything is at our fingertips, Kevin. You know, it's not like you need to have a Walmart that's 1 mile away and a Target that's 1 mile away. We can go to any website we want, and in that environment, I see the differences of some of these companies merging, as in, why can't Target be a little bit closer to the size of Walmart, maybe, if you can search for the same exact goods and you got that sentiment to go with it. Well, listen, we love the comparisons you guys are doing, man. We always appreciate the education, and we look forward to the program coming up at 11 o'clock today.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Folks, tune in every day, 11 o'clock. They're doing some great programs right now. They'll be talking GameStop as well. GameStop. Pretty tame morning so far. We got GameStop within $3, sitting at $303. We'll be right back, folks. Stay tuned.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market, and if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up about 8 points right now, trading at 42.34. NASDAQ up 60 points right now, 13,868, and we get the Dow up 16 points, 34,603. Jump around to what else we got going on in the markets. Let's jump to some of the stocks making moves this morning. We will jump to, how about some of the meme stocks? We'll start off with Clover Health. My goodness, not familiar with this company, but quite the acceleration out of the meme gate from $4 to $15 over the last couple days, up 40% right now on the open there. We'll jump to GameStop right now. You're up about 2% ahead of their earnings. Should be interesting action. Not sure what you're going to expect in terms of what's going to be happening on their earnings, because $303 per share actually has nothing to do with the fundamentals of the company. So take that for what it's worth. AMC, pretty tame action after going bananas recently. AMC up to 51.87, was as high as 77.30 last week. Talked about one of their executives. He got a price tag for selling his 40,000 shares of 62.17, I think. I mean, look at this chart, folks. That was a great execution for that gentleman or woman. Forget, I think it was a gentleman, one of the board members, 40,000 shares. I mean, talk about time in the market, folks. Yeah, it made it up to 77. Yeah, on a couple occasions you were above that, but intraday, $62. They sold it off. We're trading at $52 right now. Nonetheless, volatility persisting in a big way on those meme stocks, in a big way, to say the least. Campbell's, they're out with their numbers, so they missed. They missed by 9 cents a share. So revenue missed, profit missed. All right, lagged year-ago figures that were boosted by the pandemic. Not surprising when you think about Campbell's. They're in canned goods, okay? What is interesting here, though, I have a friend that works in Campbell's. He's on the sales side to retail, right? He's selling to, whether it's restaurants, right? Whether it's hotels, et cetera. Not selling direct to consumers. Okay, so while consumers were stocking up endlessly in their homes, you had Campbell's lagging in his specific part of the company, lagging dramatically, of course, because he's selling to businesses that were shut down dramatically during COVID. So keeping that in mind, that there is a resurgence element a little bit within this equity, but nonetheless, they're struggling because they cut the full year forecast reflecting both the quarterly results and the recent sale of Plum baby food. So they got a lot going on, and the market reflecting that. And we're lower, to the tune of 7.4% right now at $45.43 numbers. Yeah, Sound Motors. This company looks like they're going today, folks. That's what the chart's saying, and that's what they're literally saying. You got them down 7.8% today. That's after falling out of bed yesterday. Okay, so they were talking about, how about substantial doubt about its ability to continue as a going concern? Whoa, wake up to that one. The electric truck maker said in an SEC filing, which means it's material, pay attention, it's having problems funding vehicle production. Can't be in the vehicle production business, folks, if you can't produce vehicles and you don't have the funding to do it. So they're basically saying, hey, we don't have the cash to make trucks. That's the business we're in. We're not sure that we have the ability to continue, and that's a going concern. Talked about Target. Again, they get some good news out there for Target. Excuse me. Target increased the dividend to 90 cents a share, up from 68. That's a 32% jump. The improved payout's going to go to shareholders of record as of August 18th. That dividend being paid September 10th. Target shares really been accelerating out of the gate. They got an upgrade yesterday, this morning, giving back a little of those gains. The upgrade pushed it from 231 to 234. Now check this out, Target. I have some Target in a retirement account out there for sure. Target, I mean, that's a weekly. You put this thing on a daily. Well, we're talking about maybe accelerating. Now again, technical analysis, an art, not a science, folks. Where you draw the bottom trend line, right? Do you include this? Is that an outlier event? If you're using a little linear regression, right, where does that fall? But nonetheless, you can see on the top boundary line, again, where are we drawing this line, okay? Yeah, you could make the case that maybe it inches a bit higher, and maybe we're just touching that boundary line. Okay, that's a valid concern as well. Or you could make the case that maybe we've just climbed above occasionally, and maybe this is where Target might be getting a little bit ahead of itself. But nonetheless, you pull up the Analyze tab, and this is what I was talking about with Kevin. I just want to touch on real quick. So you got Target with a market cap of $116 billion. I think Walmart's pushing about $400 billion. Let's bring it down. $390 billion for Walmart, okay? So about 4 times the size of the company Walmart is versus Target, okay? Now, you get into something like a PE ratio, okay? Now, this is what they were talking about on Fast Market, folks. This is why I know this stuff, all right? Because I listen to that program, too. Check it out at 11 o'clock every day. Walmart's dealing with a PE ratio of 29. Target, PE ratio of 18, okay? Remarkable when you think about that, considering the size of the companies and maybe the growth potential, okay? But Walmart right now factored in a little bit more. But what I fundamentally, this is a little bit different than technically, all right? We went over the technicals. Target, they're in an upward channel in a big way. But does Walmart deserve to be 4 times the size of the company that Target is when they are going to begin competing for the same products, when basically the only thing you need to do is be able to deliver it to somebody's doorstep, which both of those companies seem like they're being able to do on a more regular basis to compete with the likes of Amazon. Now, both of these companies are basically nothing compared to Amazon, but Amazon's got a lot more going on. You look at Amazon right now, Amazon's a $1.6 trillion company, but you got to love the fundamentals tab on the Thinkorswim platform, because guess what? When they talk about percentage of market cap, love this graphic, all right, and just breaking it down. 48% of the market capitalization of the company Amazon comes from Amazon Web Services. Think about how remarkable that is, that half of the wealth of the market capitalization of that entire company has nothing to do with basically the brand of Amazon that most consumers are aware of, which is selling products on their website, right? North America is about 1/3 of it. International is about 17% of it. Combined, that's about 50% of it. They got a cash balance of $54 billion, and the other 48% is made up from their web services. So if you just take out web services, you're talking about basically an $800 billion company, which ties in Amazon North America, the international, and then their cash balance. So you got Amazon about $800 billion, you got Walmart at $400 billion, you got Target at $100 billion, okay? Probably deservedly so when you look at the businesses that they're doing and the reach they have, but not sure that persists, folks, at a time when sentiment for a company like Target in particular, you get Amazon up 0.2% today, okay? But Amazon versus Target versus Walmart, it's just something to wrap your head around, because the competitive space of companies able to do business and reach more consumers, I mean, you're going to start seeing basically the availability. You see the push in Walmart, and they have to get better, all right? You see the push in Target, as in getting better at delivering those products the way Amazon does, delivering it in a day or maybe 2 at the latest, maybe same day coming at you. That should be the goal of every company right now. But I imagine some of those valuations may merge together a little bit more, because there's no reason why a company like Target can't be a direct competitor with Walmart when you don't need the physical store locations that you once needed 3 to 5 years ago, when everything that we're doing is basically going to be available for online purchase dropped off at your door, okay? All you need is the ability to send those products to those homes, which Target is being able to do, just like Amazon, just like Walmart. So how does Walmart maintain a 4 times valuation edge over Target? How does Amazon maintain an 8 times valuation edge over Target? Well, they're doing the business right now, but does that persist in the future? I mean, you're seeing some of those valuations merge in a big way as you see some of these prices of some of those shares merge in a big way. All right, folks, stay tuned. We're going to be talking to Teddy Kegstad from Forex-Trading-Unlocked. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got oil up 28 cents. How about that chart? I got it on a daily basis. You trade from $33 back in November. We've now eclipsed the highs that we had back in March, and we've been talking to our man Teddy Kegstad for a while. He's got a $100 price tag in oil, let alone what's going on with the Forex market. Every trading day, folks, check out Teddy's work at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. Teddy Kegstad, good morning.
Hey, good to see you guys.
Good to see you too, man. So I think of you every day, man, when I see that oil creeping up. Quite the chart we got on a daily basis, man. Higher territory across the board. What I wanted to touch on real quick to start off, Teddy, we got CPI data out tomorrow morning with inflationary data, of course. You're all about Forex markets. When you look at something like CPI, how does that contribute to how you're looking at the markets for basically the whole spectrum of what we're about to talk about, the Forex industry?
Oh, CPI is one of the top 10 numbers of the month. That's the one nice thing about the CPI falls into the same numbers that interact with the bond market, which obviously is a function of currency pricing. So a number like CPI absolutely is a big variable. And the thing is that for a long time, like when things were really trucking along at a good pace, and everything is smooth, the number doesn't really have that much weight. Okay, but now in a situation where we're coming out of the pandemic, we're trying to get the economies going and stuff like that. We have rampant inflation. No one can contest that whatsoever, So now that number absolutely becomes a variable to watch. Like I'm definitely going to be watching out for that one tomorrow. Unemployment claims is another big one that comes out tomorrow, So absolutely, it's a big number to be paying attention to.
It's pretty surprising. We're talking to Kevin Hinks to start off the program. You can't deny the runs of bonds, just like you can't deny inflation, right. Man. I agree across the board. You can't deny what the run bonds have had to under 1.5% right now. The market seems pretty calm with all the inflationary talk, even with, as I would agree, it's pretty obvious to anybody with two eyes that are open that those numbers are pretty staggering right now in terms of inflation. But the market is not too worried, man, as we persist, at least for the next few months. Always interesting how this market can stay in the current, because I imagine, things will change as they always do. But, man, that bond market under 1.5, as you say, where, inflation in my mind is just everywhere, even on wages. I talked about wages at the beginning and the non-farm payroll numbers. You start getting rising wages when you get big numbers on CPI, man. Not that it's scary, but it definitely points to inflationary and whether it might persist. Yeah.
Absolutely. Well, that's why, you go out and go get a burrito now, I mean, like if you get guacamole on the side, it's going to cost you $8, instead of $3, I mean, like literally.
It is. You got to chuckle, man. I agree. It's just staggering. I know. And I love my guacamole.
It's shocking. So, I mean, and that's the one thing, like, I don't know if you've noticed, but, when I go out now to places where I haven't, have been going to for years and stuff like that, besides seeing decreasing menus, I'm seeing the escalation in their pricing, where just in the past couple months, I'm like, okay, so I had the same thing just 3 months ago, and now the prices went up $5, on a meal. That's a big jump when you think about it.
And it is, and it makes sense, though. I just think, you know, and this is taking me out of the market and just putting me in just a regular person in the environment, like you're talking about, just, you know, your experiences in life. If you're running a restaurant right now, Teddy, right, you know that if you're open, either people are coming or they're not, right? You know, you're going to experience that increased demand. If you're experiencing, it's not even price gouging, it's just keeping up with the prices you're paying, right? I mean, I would be raising prices right now. You know, people are going to be coming in. People probably aren't going to be staying home because a burger cost a couple extra dollars at a time when we've been trapped at home for a year. So it's just, you know, it makes sense, man. Rising costs, you have rising wages, you have rising costs, you have rising demand, pent-up demand. It's an interesting conversation, man, and it's going to be persisting in a big way. We got the dollar index a little bit lower today. What are you looking at most in the Forex market this week, Teddy?
Well, most of all, actually, it's interesting. You know, we started out with the oil and stuff like that. I'm watching the bond numbers. Those are the ones I think are going to have the biggest impact. So if you start to see the bonds go up, you know, meaning down in rates, then I think you're going to see more pressure on the dollar. I think if you see a bond break, you know, meaning higher rates, then all of a sudden dollar strength will creep into the market. Oddly enough, oil is now off the table. And here's the reason why oil is off the table now. We're hitting, once you hit the $70 to $75 a barrel, we already know that puts us into, if we were in a thriving economy, that starts to put us into a slowdown. Okay. So everyone's going out because everybody hasn't been able to go out. The question is, how long can the average person keep on going out over the summer? They're going to go out, have a couple trips, you know, but unless you have money, I mean, gas costs 80% more than it did 6 months ago, at least in my area. I mean, literally. You know, so now there's the restaurant prices. Now a family with, you know, a couple kids, and now you got to realize as people go back to work, they weren't spending money when they were working from home if they were still working or if they were unemployed. You know, if they spent money driving, it's because they went to the grocery store. It's not because they were commuting anywhere, you know. So these things start to creep into the and I think that's why we have a sideways environment setting up right now with certain currencies like the pound and stuff like that. So oil is off the table, meaning that unless we have a big sell-off in oil, which is not happening, you know, this is the pause where people are going out, money's being spent, but when that runs out of gas, that's when we have the next leg higher, you know, meaning that the dollar is going to get crushed off of that one. So you're going to have a big divergence. Like, for instance, you look at the U.S. dollar yen that you guys like, okay? It's been trending higher, okay? It just came off a higher move high. We had it with the yen on Friday, a bearish engulfing line, counter trend sell signal, okay? But the thing is, all these other markets on Friday had trend signals that went against the dollar. So that means the momentum overall now is very bearish, the dollar, and mean you're going to start seeing strength. Like you could start to see the yen actually get down back to 107. And I've been predicting a 113, 114 yen for a while. But now, because if this is true and oil starts to stagnate things, which it will, I mean, all of your viewers may not remember when George Bush was president going into the Obama term. You know, when oil started getting to $75, $100 a barrel, everything started slowing down. That's when earnings started slowing down as well, you know, because like you said, companies are charging more money for stuff because they're paying more for this stuff to produce their goods and services. Where's their profit margins going? And we know earnings drive the markets. So I think that we're going to start to hit the break pretty soon. Now it's a lag. It's going to take 3 to 6 months to really see that in the numbers. But CPI, like you said, am I watching that number? Absolutely, every month for the next year for sure, because that's going to dictate currency movement. And I think you're going to see a dollar bear really come roaring up if we start to see oil continue to go higher and rates especially if they don't go higher rather.
Yeah, I mean, it's so interesting, man. I could spend 2 full shows talking about the CPI and just whether it's transitory, because in my head, man, it's really tough for me to imagine. Yes, we're in a somewhat transitory time, but I don't think we're in as transitory time as maybe the Fed would like us to believe. You know what I mean? As in, how do we see those prices really recoil back to a normal? Yes, there'll be some recoil, but there's a level of pent-up demand, and now we're seeing that wages come in there, you know? And if you have rising wages, that's obviously going to contribute to at a time when you're spending that money on goods that cost more, and you're paying companies more, that then they have to go out and what do? They pay higher wages, right? So I don't know how that cycle breaks down really quickly.
Right.
But man, it's a great time to be in the markets for sure.
Absolutely.
Teddy, that was a quick, fast 9 minutes, man. We appreciate the update as always, and we look forward to talking to you next week. Thanks, man.
Absolutely.
Folks, check them out every trading day. Forex-trading-unlock.com. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps hanging on to gains by about 3 points right now at 42.29. Tech stocks, we're up 42 points in the NASDAQ 100. All the markets giving it up a little bit on the open. We got the Dow now negative 21 points and the Russell giving it up to the tune of 15 points below the highs. We had 23.35. Bitcoin, we're up $2,000 from the lows. We're up $2,000 on the session. We're up $4,000 from the lows of 30,915 yesterday. It'll be interesting to see how this plays out. In terms of how the FBI was able to repossess kind of some of that payment that was done to the hackers of the Colonial Pipeline. The breach of the Bitcoin wallet held by the cyber criminals who attacked Colonial Pipeline is all about sloppy storage, not a reflection of security vulnerability. One expert said, I'd be careful believing that one, folks. You never know the technology that our government may have. Pretty interesting that they were able to hack into that Bitcoin wallet and take back kind of that ransom payment that had been paid, retrieving $2.3 million in crypto. And you had the FBI saying, I don't want to give away our trade calf in case we want to use this again for future endeavors. One of the things they're talking about is that maybe they were able to access a payment server, or et cetera, a centralized platform, relatively easy for the FBI to track. Nonetheless, this is part of the reason why you saw Bitcoin accelerate lower, on the idea that maybe it wasn't as untrackable as once first thought, but the FBI not quite yet ready to give up their secret on how they did that. But I imagine there's some bright minds over at the FBI understanding that they do not want millions, if not billions, able to be transferred in the crypto sector without being able to track it. And just like that, they take back millions that were paid out. All right, folks, what we have, how about a week from today? Our man Dave White, he's going to be doing a live options webinar for subscribers to any of his products, folks. You can sign up right on the front page of TFNN. His daily newsletter, The Path of Least Resistance. He has his weekly newsletter, The Technology Insider. He has his charting software, The Art of Timing of the Trade Charts. You can sign up for any of those services, and you gain access to this event 1 week from today. Dave's going to be talking about options, folks, and it's going to be a great webinar, I'm sure. Dave always does a great job. You can see what he's going to be talking about on the front page of TFNN. All those products come with a 30-day money-back guarantee. If you can't attend next week, it will be archived as well. Check it out on the front page. Start that subscription today. Get ready for next week. Stay tuned, folks. Basil Chapman, he's up next. Live programming all day at TFNN. Steve Rhodes is back today as well.